All right, everybody, welcome back. I am so excited for today's deep dive.
Yeah, this is going to be a good one.
It is, because we're diving into something that I know a lot of you are interested in, and that is the big crypto crash of January 2025.
Buckle up.
Buckle up indeed. But listen, this isn't just any old recap of the news. You've sent us a bunch of
Oh,
sources,
that's
and you want to know, like, what are the key takeaways? What is the important stuff that we should all be paying attention to?
we're here to help you extract that.
Exactly. We're like your personal crypto miners,
Love that analogy.
sifting through all the noise to find the real gems.
The signal through the noise.
Yeah, so think of it like, we're on this crypto roller coaster. It's been a wild ride,
It has.
but suddenly
That took a plunge.
took a plunge.
Yeah.
And we need to figure out why, like what happened? What were the twists and turns that led us to this point?
Yeah, and your sources actually give us a really great roadmap.
They do. They point to 5 key factors.
Nice.
5 that we're going to dig into today.
Hmm.
So we've got regulation, market sentiment,
Ooh, that's a good one.
macroeconomics, which always sounds really scary, but we'll
Hard
break
to
it down.
demystify it.
We will. Tech issues, and then
Dun, dun, dun.
the big one, market manipulation.
Oh, yeah.
So let's start with regulation, because it feels like the Wild West days of crypto are kind of coming to an end. And I'm curious from your perspective, like, is that part of what spooked investors?
Absolutely. I think you hit the nail on the head there. The Wild West is becoming a bit more like, the suburbs.
With rules.
With rules, yeah, exactly. And, investors, they don't like uncertainty and all this new regulation. It's creating a lot of that.
Well, yeah. I
And
mean, think about it. Like, if you've been playing by one set of rules for years
Yeah.
and suddenly everything changes.
Yeah, the game changes.
The game changes, you'd get nervous
Really,
too, right?
we would. And,
Losing it.
one of your sources actually mentioned a 40% increase in regulatory announcements just in 2024 alone.
Wow.
That's a lot of change in a very short period of time.
That is, and it makes me think about one of the studies that I was looking at from the, Name of Research Institute.
Oh, yeah, I saw that one.
It showed that there's a direct correlation between these big regulatory announcements and market dips.
Yeah, it's almost like clockwork. You get an announcement and then boom,
The market
it
reacts.
corrects.
So it seems like there's a clear connection there.
Oh, for sure.
Now, beyond just the external pressures of regulation, we've also got to talk about what's happening inside the market itself and this whole idea of market sentiment, which you flagged as being super important.
Yeah, I love this one because it really gets into the psychology of trading. And, for years it was all about FOMO.
Fear of missing out.
Everyone was afraid of missing the next Bitcoin, so they were pouring money into anything and everything.
Yeah, I remember seeing those headlines.
Yeah, people taking out second mortgages to buy meme coins. It was crazy.
In wild times, but then what happened?
Well, the market started to wobble just a little bit, and that FOMO, that fear of missing out, flipped, and it became FUD.
Which is?
Fear, uncertainty, and doubt.
Ooh, I like that.
Yeah, it's a powerful force, and, one little bit of bad news can spiral out of control.
Especially with social media.
Oh, absolutely. It's like an echo chamber.
Amplifying everything.
Amplifying everything, and then suddenly everyone's panicking and they're selling, and that just pushes the market down even further.
It's a domino effect.
It really is. And actually, one of the articles that you sent over mentioned a 60% increase in negative crypto sentiment on Twitter just in the weeks leading up to the crash.
Wow.
So those digital whispers,
Yeah.
they had very real-world consequences.
Okay, so we've got regulation, we've got sentiment. Now let's zoom out a little bit and talk about the bigger economic picture, macroeconomics.
The doom and gloom.
Yeah, a lot of people get scared when they hear that word, but it's actually not that complicated.
It's not. It's really just about the big picture stuff. What's happening in the global economy.
So how does that tie into the crypto crash?
Well, think about it. When the economy is doing well, people are feeling good. They're more likely to take risks.
They got money to burn.
Exactly. They're investing in things like crypto. But when the economy starts to slow down,
People get nervous.
they get nervous. They want to play it safe.
They want to put their money in something that feels more secure.
Exactly. And that's where things like bonds start to look more attractive.
Right, because those are considered lower risk.
Exactly. And, I think you had bookmarked some stuff about the Fed raising interest rates.
I did.
That's a classic example of this dynamic in action. When interest rates go up, bonds become more appealing, and that pulls money out of riskier assets like crypto.
Interesting. So basically, when the economy is shaky, people want to hold on to their money a little tighter, and they're less likely to gamble on something like crypto.
Exactly. And, you sent over some data about investor portfolios, and it showed a 25% outflow from crypto funds in late 2024.
Yeah, I remember seeing that.
And a lot of that money was flowing into more traditional investments, which suggests that people were getting a little risk averse.
Very interesting. So it's all connected.
It is. It's this big interconnected web.
Okay, so we've talked about regulation sentiment, macroeconomics.
Hmm.
Now let's get a little bit more techy and talk about some of the tech issues that were happening behind the scenes.
This is where it gets a little bit scary.
It does, because it makes you think about your own digital wallet.
Right. Like, is my money safe?
Exactly. And, one of the sources you sent over talked about vulnerabilities within certain blockchains, which is basically the technology that underpins all of crypto.
Yeah, and we've seen what can happen when those vulnerabilities are exploited.
You think about the Phantom Protocol.
Yeah, that was a big one.
Millions of dollars drained from all these different platforms.
It was a huge blow to the whole DeFi space.
Decentralized finance, for people who don't know the lingo.
Yeah, and it's not just about the money that was lost, it's about the trust that was broken.
Yeah, because trust is everything in the crypto world.
It really is. If people don't trust the technology, they're not going to use it.
And if they don't use it, then the whole system falls apart.
Exactly. So these tech issues, they're not just technical glitches, they're existential threats.
I like the way you put they're existential threats.
Yeah.
Okay, so we've covered 4 major factors, but now we have to talk about the elephant in the room. The big one, market manipulation.
Dun, dun, dun.
You had a few sources that talked about these pump and dump schemes.
Yeah.
I mean, is this really that big of a deal?
It's huge. It's basically like a rigged casino.
Okay, explain that.
So imagine a group of people get together and they decide to artificially inflate the price of a digital asset.
So they're pumping it up.
Pumping it up, yeah, through coordinated buying, spreading hype, maybe even spreading some fake news.
Then what happens?
Well, the price starts to skyrocket,
Yeah.
right? And that attracts all these unsuspecting investors who think they're getting in on the next big thing.
FOMO kicks in.
Exactly. But the whole thing is a setup. Because once the price is high enough, the manipulators dump all their holdings.
So they cash out.
They cash out, and they leave everyone else holding the bag as the price crashes back down to earth.
So it's like a game of musical chairs.
Exactly. Someone's always left standing when the music stops.
And in this case, it's the everyday investors.
Sadly. Yeah, the ones who got sucked in by the hype.
Yeah. So market manipulation, it's a serious problem.
It really is. It undermines the entire system.
Okay, so let's take a step back and look at everything we've talked about today. We've got regulation spooking investors. We've got FOMO turning to FUD, and those digital whispers on social media really amplifying everything.
Yeah.
We've got the global economy kind of wobbling and making people risk averse.
Yeah, right.
We've got tech issues eroding trust.
Yeah.
And then we've got these pump and dump schemes adding even more chaos to the mix. I mean, it's a lot. It's a lot to take in.
Yeah.
So out of all of this, what is your biggest takeaway from this whole crypto crash?
For me, it's the realization that crypto is growing up. This crash, it's like a coming-of-age moment.
I like that.
It's painful, yeah, but it's also necessary because it's forcing the industry to confront its problems.
And mature.
Exactly, to mature, to become more robust, more transparent, more resilient. And the big question is, will it succeed?
Yeah. Will it learn from its mistakes?
Right. Will it emerge stronger and ultimately worthy of mainstream trust?
That's the million-dollar question.
Or the trillion-dollar question in this case.
Exactly. Okay, so to sum it all up, we've got these 5 massive forces at play. The rise of regulation, the volatility of market sentiment, the ripple effects of the global economy.
Don't forget the tech vulnerabilities.
Oh, right, the tech vulnerabilities and then the lurking dangers of market manipulation.
It's a lot to keep track of.
It is. But I think the key is to stay informed, to do your research, and to not get caught up in the hype.
Absolutely.
Because at the end of the day, this technology, it has the potential to change the world.
It does.
But it's going to take time for it to mature and to find its place.
Right. And this crash, it's a reminder that there are no shortcuts.
Right.
There's no easy money.
There are no guarantees.
Exactly. It's a high-risk, high-reward game, and you have to be prepared for the ups and the downs.
And on that note, we're going to wrap up this deep dive into the crypto crash.
Has it really been that long already?
I know time flies when you're having fun.
It does.
But thank you to everyone for diving in with us. Keep asking questions, keep exploring, and as always, stay curious.
See ya.